Good evening everyone. The first day of the demo and a Nifty Expiry. Before we start, you have received an email regarding the indicator names. There was a small mistake on my part. IV regime quantifier and rolling straddle dynamic ATM does not have the letters QG in front. The indicators are named like this: IV regime quantifier and rolling straddle. Correct. So don't look for QG with 4 indicators. QG will be in 2 and other 2 will be named like this. Okay, so today market opened somewhere around here and then the movement started. So what I will do is I will go to the replay mode and come out here. Yesterday the 25-200 straddle was sold around 112. If you see the right hand side, you will see the rates. So let us see in the morning how this performed. Yeah, this is today morning. As you can see, IV is high and market straddle price is falling. If you see the Nifty price was like this. Now let us proceed. In fact, we do not need the Nifty chart. Let's concentrate on the straddle chart as such. Okay, this particular place gives you a signal of square off on the straddle trend. So if you sold in the morning at 105 or something, around 70-71, you should have squared off your trade. Now, if you want to enter and trade, this IV must enter into a normal or a sloping down, that is red. Let's see where it happens. See here, if you try to sell a straddle at 65, it jumps up to 81. So if the IV is in a high zone, don't sell straddles, wait. This cell which you see, I want this on trend is giving you a signal. This must be below the line, and within this two, if both match, better. This switches to 25-200. Now see, in this particular bar, your straddle is 25-200. This indicator below has given you a sell. IV has gone into red. That is, from IV going up, it is now sloping down. So your straddle price here is 63. Your stop loss is 95. So we sell the straddle at 63, 64, whatever. Starts to go down. Straddle price is being calculated out here. You see this. Okay. Now the straddle price is 49. When you go inside the course, you will see a particular rule that before 1 o'clock, if straddle price comes to 0.2% of the underlying, then you square off your trade because not much premium is present. When I say underlying is obviously Nifty. Nifty is quoting at 25,200. So 0.1% of that is 25 points, 0.2% of that is 50 points. So if straddle gets below 50 at 12 o'clock, it should be 0.2% normally at 1 o'clock. Okay. If it goes there much ahead of time, it means from here the chances of the straddle coming down more are very low. So there I will suggest you square off your trades and stand aside. So the one which we sold at 64, we will square off of 48 and stand aside. This continues to go down. Yeah, this is the problem. If you stay short, it went down till 46, we squared off at 48, then jumped up to 65. So if it goes below 0.2%, this is the craziness which will start happening. So at 0.2%, better square off, go to the sidelines, wait for a spike or something else. See, went down to 36, again jumped up to 56. It was 200, then it's 150. Actually, Nifty here was falling. So this was actually switching on the downside. Okay. Now this is also entering into a high IV region, which means now a spike can come. Today the spike did not come, but whenever in the future you see a scenario like this, expect the straddle to jump up. Now for the straddle to jump up, there are two signals. Either the stop loss gets crossed or this particular straddle trend indicator which you are seeing out here, it will give you a blue bar. It did not happen. You will see it within the course. If you go through my previous tweets, you will see that if there's a blue bar, it means the straddle is going to go up. That was not there. So buying the straddle was not justified. Neither was selling a straddle. As usual, no trade. Okay, now the straddle is 33, 25 200 straddle, and time is 155. 33 straddle means that straddle price is telling you that Nifty from here will go up or go down maximum 33 points. So if it goes more than 33 points, you will start losing money on the straddle. This time was around 155. Now what I have out here is, this is the 25 200 straddle. This is around 155. Straddle is 34, 33 as I said. Now 34, 33 in a simple common sense is such a low amount. It's like 0.15, 0.12% or something. If you get such a low straddle price, just use common sense and please don't sell the straddle, because 30 rupees straddle with 1.5 hour left for expiry means accidents are bound to happen. That's why from here, from 33, the straddle actually went up to 96. That is the 25 200 straddle. You will not see it out here because this is the rolling straddle which will continuously roll at every 50 points. But there's a cost involved if you try to do this. Okay. See, even from 33, this is jumping up to 53. So the risk reward at 33 is absolutely not in your favor. Better not poke this. This is 230. Now the IV is coming down. Again, this is too low, but I know a lot of people try to sell at 25, 20, 30 and try for it to go to zero, but that's not what I do. And I suggest you also don't do that, because that will expose you to gamma risk. As I said, 20 jumps up to 49. So don't poke. Simple. I mean, if you see the Nifty out here, this is what the Nifty move was going on after 2 o'clock, straight downside. I mean, somewhere from 25 186 to 25 104, almost a 80-90 point down. That's why this one went up from 30 to 96. And this one was hovering here. We have now entered 3 p.m. After 3 p.m., IV analysis will not work. This was the end of the day. Now, if we look at Nifty just with the IVRQ, I'm not looking at the straddle. I'm just trying to see what the volatility was trading and how Nifty was behaving. See, when IV was going up, this particular point from here, see this IV going up, see market is going down. Now see when the IV starts to go down, I mean from green enters into red, this place. As long as IV is going down till here, you see markets are absolutely at the same place. It started off at 25 177, it is at 25 180. So this 11:15 to 105, 2 hours, market did not move because IV was continuously going down. The moment IV starts to go up, the risk of upside increases. Here the spike comes later. Here is your another spike, and then Nifty goes down. So IV predicts that a move is coming into the markets. Along with the straddle, this will be your trades. So if you followed this particular system, your day was kind of cool. There was no, I would say, stress or suddenly the straddle moved, I don't know, and stuff. Today was a kind of a cold day, but we have two more expiries within your demo. One is the Sensex expiry on Tuesday, and another one is the Nifty expiry on Thursday. Now, if you are attaching the indicators tomorrow, I will just update the indicators today. You can change the dates yourself. Just to make it easier, I will update the dates on the code. So tomorrow when you draw the indicators, Nifty will come automatically if you want to change it to Sensex. Remember, if you want to change it to Sensex, you have to do two things. Option code will be BSX, not Sensex. B for Bombay, S for Singapore, X for X-ray. Okay. Expiry date obviously will be next Tuesday. Strike step will be 100. Rest of the things will be whatever. I think you have understood that by now. So this was today's action. I guess more than the money, what you should have understood is if you trade with this, you will be on the right side and it will be a much more peaceful day on expiry days. Now tomorrow is Friday, the first day of the weekly expiry. Tomorrow evening also I will post a video, show you that how you should trade on the first day of an expiry. Tomorrow, let me tell you beforehand, we are not going to look at selling straddles, but rather we are going to look at selling strangles. So tomorrow, rather than the rolling ATM straddle, we are going to use the other indicator, that is the QG straddle chart, which will help us plot a strangle on the chart. Okay, that's all for today. I hope everybody enjoyed the first day's demo. See you again tomorrow. Bye.